Assalamualaikum and hi guys, my name is Umi Nur Umaymah binti Chinal Arifin and I would like to share with you about these three components. First, what is Islamic finance? Islamic finance is a type of financing activities that must comply with Sharia, Islamic law. The concept can also refer to the investment that are permissible under Sharia. Second, value of Islamic finance are first, it promotes the principle of financial justice. Islamic financings pave way for the sharing of net profit or loss and the risk involved in a proportional manner between the lender and the beneficiary. Therefore, if a financier is expecting a claim on profit of a project, it is necessary that he or she should also carry a proportional share of the loss of the project. Second, reducing the impact of harmful products and practices. Sharia principles forbid any investment that will support industries or activities that are considered harmful to the people and the societies in general. These include usury, speculation, and gambling, irrespective of whether these are legal or not in a given territory. Third, avoidance of riba. Any premium charged on money borrowed is tantamount to riba, irrespective of the amount paid. Hence, it is prohibited because it concentrates wealth and nurtures inequality via exploitation. Fourth, risk sharing. The basic principle of Islamic finance is risk sharing, which is a component of trade rather than risk transfer. In a Islamic financial system, provider of financial capital and the entrepreneurs share business risk in return for shares of the profit. Hence, an Islamic financial system promotes entrepreneurship. Lastly, it assists in financial inclusion. The conventional banking system is based on paying interest at a predetermined rate on deposits of money, as both payment and receipt of interest is prohibited by the Sharia law. Muslims generally abstain from banking. Through Islamic banking, financial inclusion can be promoted and a larger pool of savings can be brought into the economy. Third, product that I choose is deposits. This is the type of Islamic banking deposit which is saving, current, term and investment. Deposits are the main source of funds for commercial banks, merchant banks, finance company and also discount houses based on the license granted by central banks. Without deposits, bank cannot survive and function as the funds collected in the form of deposits are used for lending. Next, the difference between Islamic deposit and conventional deposit are, for Islamic, the principal amount is fully guaranteed except mudarabah. Second, there is no presence of interest. However, the bank can offer hibah, which is gift. Third, the bank cannot offer any incentive in the form of gift or promotional items or also attractive benefits and others to attract new depositor, particularly when it is structured based on card or wadi'ah. Lastly, the deposit is accepted on the condition that the money will be put to work together with the management expertise and skill of the bank. For conventional, both principal and interest are predetermined and guaranteed. Second, interest is fixed at predetermined rate but is subject to revision. Third, the bank can offer incentive to attract new depositor. Lastly, the deposit is a form of debt given to the bank by the customer. This is the Islamic financial system in Malaysia, divided into three parts. First, Islamic insurance, or known as takaful, is a financial transaction undertaking to protect widows, orphans, and other dependents of the deceased heir against future unexpected financial risks. It was introduced to cater the needs of Muslims in order to protect their family and also assets from death or disaster. Second, money market is a financial market for transaction of financial asset between buyer and seller, and also between borrower and also lender. Lastly, capital market is referring to the capital market where activities carried out are not contradicted to the Sharia, eliminating the prohibited element of riba, maisir, which is gambling, and gara, which is ambiguity. And then, this is the modus operandi of mudarabah. First, depositor deposit a certain amount of money, example, 70,000 ringgit for a specific period of 1 year. The agreed profit sharing ratio between the investor and the bank is 70 and 30. The 70% profit will go to the investor. Second, bank utilize the money in various forms of investment and financing. Third, profit earned by the bank 70% to investor and 30% to the bank. Lastly, in the event of a business loss, the loss shall be borne solely by the provider of the capital. However, if the losses are caused by mudarib, negligence or misconduct, the mudarib shall be liable to bear all the losses. The instrument that I choose is mudarabah, which is profit sharing contract. Mudarabah is a type of partnership where one party provides capital and the other party provides labor and management skill. So, there are two parties, capital provider and manager. The one who provides capital is called Rabul Mal or capital provider, and the working partner is called Mudarib or manager. Second, Mudarabah can solve customer problem. Mudarabah fulfill the needs of different types of people. On one hand, there are people who have capital but they lack in entrepreneurial and management skill. On the other hand, there are people who have entrepreneurial and business management skill but they don't have capital to do that. The contract of mudarabah enables both parties to enter into a partnership and make profit. The capital provider benefits from the expertise and skill of the manager. Likewise, the manager gets benefits from capital to invest in profitable venture and earn money. Third, the benefits are first, higher level of investment. Mudarabah lead to higher level of investment as new projects continue to be undertaken as long as there is a positive return. Second, distribution of income. Mudarabah is particularly capable of attracting those potential entrepreneurs who are unable to provide any collateral. This possible increase in the supply of entrepreneurs will decrease the power of existing entrepreneurs and can lead to a desirable distribution of income by discouraging concentration of wealth in fewer hands. Lastly, financial stability. It is further emphasized how an economy based on the institution of interest is inherently unstable, and how the Islamic technique of finance based on profit and loss sharings has the potential to provide financial stability. Lastly, the difference between Islamic mudarabah and also conventional fixed deposit. First, Islamic are profit paid based on profit sharing ratio. Example, 50-50 or 40-60. Second, no guarantee on principal using investment concept. Third, on upliftment before maturity, the bank may pay certain portion of the profit based on completement, no penalty imposed. And fifth, higher profit earned on investments, high return to depositor and bank. 6. Increased profit sharing ratio when require more funds and vice versa. 7. Issue certificate as evidence of placement, and only profit sharing ratio and tenor will be indicated. And lastly, halal allowable to Muslims but no issue to non-Muslims. But for conventional, it is a fixed rate predetermined on placement. Second, principal amount is fully guaranteed. Third, on upliftment before maturity, interest will be paid based on saving mode rate or half of the contracted rate on completement. Fourth, high profit earned by bank but some return to depositor. Fifth, increased interest rate when require more funds or vice versa. Example, tight liquidity position. 6. Issue certificate as evidence of placement with interest rate and tenor note. Lastly, riba or usury related, thus haram and forbidden to Muslims but no issue to non-Muslim. Okay, that's all from me. Thank you.